I think both parties lose from the trade war, but the numbers suggest that the damage to the U.S. side is greater in percentage terms than to the Chinese economy. That doesn't mean that the Chinese economy is not severely damaged. And I think for China, the business confidence in particular has been hit very hard in the past 15 months or 1.5 years. So I think some progress on trade negotiation will be positive for both sides.
Shan, given your history of deal-making and how much experience you have in M&A, I mean, there have been reports here in the U.S. in recent weeks that the administration here could potentially put restrictions on capital flows to China. You're also seeing some tighter standards be floated right now by lawmakers around CFIUS. What do you expect to happen in terms of cross-border deals and also just investment flows moving forward?
Of course, any restriction on capital flow is bad for investors. But from my point of view, as an investor, and we invest billions of dollars in Asia and in the United States and in Europe as well, capital flow restriction is always bad. But in this world, there's a lot of capital. There's a lack of investment opportunities. And therefore, I think the provider of capital typically suffers if there's a restriction on where to invest, whereas it is actually more difficult from our point of view to find good investment opportunities. I think such restrictions, again, will be bad for all the countries involved, especially for investors. And from our point of view, we represent many of the American investors. And we have many state pension funds as our limited partners, investors, and they have benefited enormously from our investments in Asia, especially in China, in the past 10 years.